Welcome to the episode 2 of the Market Podcast. So a quick rundown of what happened last week. The FTSE 100 index experienced a decrease of 0.81% over the past week. In terms of major events that may impact markets, the multi-asset solutions team at J. Rowe Price produced a weekly market recap. Stock indices in the US experienced a mixed performance over the past week. The S&P 500 increased by 1.27%, the Nasdaq 100 increased by 2.2%, and the Dow Jones increased by 0.95%. The Russell 200 index decreased by 1.28%. Looking at historical trends, past market peaks have often been followed by a recession within 13 months, with the unemployment rate rising by an average of 0.7% at this stage. There's been recent shift in stock market leadership towards a more defensive position, with defensive sectors such as healthcare and consumer staples outperforming alongside parts of growth and technology. In terms of economic data, the US economy appeared to still have significant momentum heading into the past week, with weekly jobless remaining near 5-decade lows and S&P Global Composite Index at both current service and manufacturing activity indicating expansion. Fundamental only analysis of the stocks involving looking at the economic fundamental data to figure out which stocks are likely to perform well in a particular market. And this analysis can include studying a company's financial and comparing it to its peers and industry as a whole. Investors should keep in mind that the value of their investment will go from them can go down as well as up, and how they see investments will be affected by movements in currency exchange rates. It is also important to note that those views expressed by analysts still expressed may to be current and may have already been acted upon. So, going a few things from last week, there wasn't exactly that much going on per se from last week. It was quite a slow week, depending on which side. If you're scalping, it was a very busy week. If you weren't, then it was very, very slow type of week. Now, a couple of points to mention for this week, that there is major data coming out. We have already had the IFL from Germany this morning, UK time 8 a.m. Tomorrow we have house price, HPI. Then, of course, President Lagarde speaking, which is Tuesday. On Wednesday, we have some pound data and the hand-in-hand sales, so Holland data from the US. Thursday, we have some economic bulletin from the Euro, consumer confidence in the Euro, CP, consumer prices from Germany, initial jobless claims for Thursday, and some Japan data. And then Friday, we have the GDP from the UK, retail sales from Germany, and unemployment from Germany. So quite a German-eccentric week, which I want to keep around because Germany is sort of in the news, especially fundamental-wise. The CPI for Euro itself, and then the CPI, core personal consumer expenditure, so price index stuff from the US too. There is a few things that one want to keep an eye on, especially there is a few, it's more rumor mill when it is heavy data. So yeah, the surge US core PCE deflated on Friday, so we expect core PCE price inflation to slow down from a robust 0.6% month-on-month in June to a still strong 0.4% in Feb. TD Securities rose the year-on-year rate likely rose a tenth to 4.8%, just above the normalization in price gains will be bumping. So like I mentioned in the last podcast, the inflation, we are starting to see the deflation. We're starting to see that balancing out and normalization of prices. Stagflation, sorry, not deflation. Deflation is to come yet. So stagflation, yes, inflation rate is bouncing up and down, but we are still within the means of 2.3 ranging inflation, as you could say. So there is that to ponder over too. So one is now trying to predict when deflation become a thing rather than when is the next turmoil. So, because if you can balance the deflationary act, if inflation is going to happen, then the turmoil is less likely due to the balancing act of the inflation. Depends also how much the economy is lagging of an effect. So it depends on the inflation curve and Brexit and so on. You can always chat to us about it in the Access server. Now, looking over the market itself, we've seen that we've got a plateau sort of. Market doesn't really know what to do. It's ranging at the moment. Don't find the range. Don't try and trade break out the range. Just enjoy the range and be careful of which way it's going to break, because the range could last maybe end of the day. It could last another week. So you don't want to be heavy orders going on a potential range break either direction. But of course, unless you position trades, then well, you position for that. So then all of that goes into your risk assessment too. Now, a few things that I want to make clear and make a note of as well is both of the FX risk disconnect. So key takeaways: fault lines are fueling the something must break narrative, but markets are using a sledgehammer to crack a nut. Transaction is being indiscriminative and creating an FX/risk disconnect. Deleveraging of favorite trades has so far dominated. Next phase likely to see G10 FX revert back to traditional framework where the basic balance matters. The Ides of March strikes again. The curse of March has once again hit the markets against the backdrop of tightening in global financial conditions. The something must break narrative has been frequently used over the past year to describe market concerns that a high rate environment will expose fault lines in the macro economy. Sectors such as holding, credit, and commercial real estate, among others, have been touted as potential weak points, but it is hard to make the case that markets had expected. There is a regional bank on the west coast of the US to provide the catalyst for the current events. Current episodes, apologies, have global financial stability concerns. The market appears split on whether this could morph into something big or whether central bank action will be enough. The G10 FX price action has looked at odds with some of the major prior on currencies should react to all events. Both pound and SEK have outperformed deposits being too high beta currencies with basic balance deficits. For now, G10 FX price action need more indiscriminate textbook, but we think that this is about to change. So FX is sort of being monitored very heavily due to, well, you know, the fundamentals. We got Russia, Ukraine, inflation, we've got the banking going on. Now, currently they've explained this to a lot of people, what is currently going on, because everyone is in panic mode. Well, not everyone is in panic mode, but there is a majority of people who are in panic situation and are trying to figure out what the hell's going on and where do we go from here and what do we do. Now, history has taught us a few things now. Obviously, this is my opinion. This is not a fact. This is just the way that I'm using to be able to understand it better myself. I'm not trying to stand on anyone's toes. I'm not trying to say that some things are simplified because of this explanation. All I'm trying to do is explain how I'm trying to understand what is going on myself. Now, the opening one to the explanation is that a few thousand years ago, there was famine, there was locusts, and everyone blamed that God was angry. Now, we've had COVID, we've had famine, food shortages. We've also had locusts. If you've kept up with the food side, that has been going on. No one's really blaming on God. Everyone thinks it's just the end of the world. 2,000 years ago, all of this would have been blamed on God. Whereas now, it's getting blamed on the Chinese or some bloke in a US experimental lab or something. Or simulator. There you go. 2,000 years it was blamed on God. Now it's being blamed on a simulator. Now, what one has to remember is that a lot of what is going on is just a repeat of from the late 70s to the early 2000s, and it's all happening at once. You've got the financial crash of 2008, which is going on. A mini bank crash is currently happening. Then you've got the high inflation of the 80s. Then you also have the food shortages of the mid-2000s and the 80s as well, the oil shortage, the supply and demand shortage. You got to remember as well is that the global economy hasn't been stress tested since 2008. So the global economy has been running perfectly fine and dandy. It did have a hiccup in 2014, but the last time we had a supply shock like this, where the economy closed down for a few years, was in the about early 1900s, when the last pandemic really was, when something like this happened. Yes, you could compare micro events to what has happened, but there hasn't really been much that has stress tested the global economy. And the global economy is totally different now than it was 100 years ago, even 50 years ago, even 20 years ago. You've got ships moving stuff around. We've got Amazon trying to bid drones to deliver you stuff. So just be cautious that, yes, this could be the end of days. There is no doubt about it. But as a wise man in the Access server once said, Aquatic, you said that, well, there is no point trying to short stuff, because if you short it and it works, then that means the world is ending. And if the world is ending, what's the point of shorting? So there is not. Also, a thing as well is that there is a potential 9/11 event on its way. I don't know why one thinks that, but one does. There's just so much pattern recognition happening at the moment. We got the inflation. We had that in the 80s. There was so much going on. The only thing that's missing is that 2000 to 2001 event. It could be American soil, it could be different soil, but there is some sort of event that is going to happen. Whether it's a theater, I don't necessarily think that, but there is going to be some sort of, maybe it's a cyber war event, because we are watching a cyber pandemic. We have that as an FA theme within the Access server, so we are keeping an eye on that. So cyber pandemic is a potential theory, but these are only theories. There is no cemented analytical news analysis yet of what the event could be. So one does just, it's not something to panic over, but you want to keep it in your mind just in case. It's better to know the information and not need it than need the information and not know it. So that is that, episode 2. I hope this episode has reached you fine and dandy. Hopefully we can get some guests on for the next episode, but until then, thanks for listening and bye for now, and hopefully we get to have your ears once again in the next episode.